Good evening. Thanks very much for joining us on Business 360. Global markets rebound after a clutch of U.S. banks joined forces to rescue First Republic Bank with a $30 billion bailout package. This comes a day after Swiss National Bank threw a $54 billion lifeline to Credit Suisse. Positive global cues lift Dalal Street. Financial stocks lead the rebound. The sensex gains 350 points, the nifty up over 100. Both indices down 2% for the week. TCS shares remain steady in trade after incoming CEO Krithivasan promises continuity, adding that priorities and strategies will not change. And emotional Rajesh Gopinathan says it was important to resign before the new financial year, so the new CEO has a clear runway. More than a dozen production-linked incentive schemes put under review by Nodal Government Ministries. Sources say officials are assessing if higher investment targets have left many companies out of the ambit and if the eligibility criteria needs to be tweaked. That's an exclusive. The Delhi High Court directs Delhi Metro Rail Corporation to pay Reliance Infra 4,800 crore rupees worth of arbitral award dues within a month. The court says failure to pay may lead to action against the centre and the Delhi government. Warns that DMRC funds may be attached as well. Deepak Bagla steps down as the CEO of Invest India. Money Control reports Bagla stepped down over questions over the work accomplished by the organisation. Parliament adjourned for the second day in a row amidst loud sloganeering from the Treasury and opposition benches. The BJP says they won't allow Rahul Gandhi to speak in the House unless he apologises for his remarks on Indian democracy in London. The opposition continues demanding a JPC probe into the Adani Hindenburg matter. Chinese President Xi Jinping is set to visit Russia next week at the invitation of President Putin. This will be his first visit to Moscow since the Ukraine invasion. Pharma companies betting big on the dermatology space with quite a few merger and acquisitions. This segment sees a monthly growth of 11.8% in Feb. Analysts expect 10 to 12% annual sustainable growth. We get you a deep dive in what's brewing in the dermatology space. Well, let's start with the top story this evening. Global markets heaving a sigh of relief after the rescue of Credit Suisse and First Republic Bank, which has calmed some frayed nerves for now. But first, let's talk about First Republic, where a group of America's largest banks have come together to rescue it. Bank of America, Goldman Sachs, JP Morgan and 8 others will deposit $30 billion in First Republic to allay fears over its failure. The move comes after the Swiss Central Bank issued a $54 billion loan to Credit Suisse. But Credit Suisse troubles are far from over. U.S. shareholders have sued the Swiss bank, claiming that it defrauded them by overstating its prospects ahead of this week's stock crash. In its last annual report, Credit Suisse admitted to have found, and I quote, material weaknesses in its financial reporting processes for 2021 and 2022. Frank Holland reports on the turmoil that has rattled the banking sector this week. Frank, many thanks for joining us. Well, heading back home, shares on Dalal Street also recovered in tandem with the global markets. The sensex gaining over 350 points today and the nifty added about 100 points. Financial stocks leading the recovery. But the picture for the week is different. Both the sensex and the nifty down 2% each. Prashant is here to wrap up the market action for us. Prashant, markets closing lower, 2% each for the week. And next week, of course, all eyes will be on the Fed and some other important triggers.
We had a second positive close for the markets, both on the Nifty and the Bank Nifty. It's good because market conditions have been so turbulent. It was 100 points on the Nifty. Banks did a little better on the Bank Nifty, as you can see. For the week, that is Friday to Friday, both indices lost about 2% or so. So it was down in that time frame. Metals and IT did well, sectorally speaking. You had pharma, FMCG, and autos, which were large top-down kind of losers. Gains now coming through in HCL Tech, Hindalco, Ultratech, UPL, HDFC Life, and losses in names like Eicher, Maruti and NTPC. Market breadth was very positive, especially, if you look at on an adjusted volume basis, what went up with large volumes, and the number of those stocks was pretty impressive. But a few names here: KPIT Tech, APL Apollo, Adani Green, Adani Transmission, Kalyan Jewellers, Bank of India, Action Construction, MedPlus, Prestige, a few names in terms of the gaining list. And on the losing side, you had Biocon, Delivery, Patanjali and Aavas Financiers. There were a few more, but these are the prominent volume-led ones on the way down. We have had 2 days of positive daily closes. the market will need a little bit of base building before it starts another trend and it starts to look up in a more sustainable way. And what will be required for that to happen is more stable global cues as well. The ECB hiked by 50 basis points earlier this week. Next week, the big cue, of course, is going to be the FOMC decision on the 22nd. Let's hope things are calm over the weekend into Friday and over the weekend as well, and we open up with better cues on Monday morning. Back to you.
Prashant, many thanks for joining us. Now, the big story, TCS shares today remain steady in trade this after incoming CEO Krithivasan promised continuity, adding that priorities and strategies will not change. An emotional Rajesh Gopinathan says it was important to resign before the new financial year started so that the new CEO has a clear runway. Here's more on the change of guard at India's largest IT company.
There is nothing more challenging than doing the quarter on quarter and making sure that performance keeps up with it. It's been 10 years of doing that on a relentless basis, and I've enjoyed every minute of doing it. But then sometimes when you get to those milestones, you start thinking, okay, so what's next?
12 hours after a bolt from the blue, the outgoing CEO of TCS, Rajesh Gopinathan, spoke about his decision to leave the job he took over from N. Chandrasekaran 6 years ago. TCS has appointed Krithivasan as CEO designate, and he will take over from Gopinathan in September.
I owe it to all our customers, all our colleagues, our employees, and all stakeholders to make sure that I am there for whatever time that Krithi needs and will be available to Krithi 100%, not just during this transition period, at any point in time in future.
TCS has stuck to its policy of promoting an internal talent with Krithivasan, a veteran at TCS, to the top position. Now, he has experience across multiple functions and he has been leading the company's largest vertical, BFSI, which contributes over a third of TCS's revenues by heading it for more than a decade.
A career Tata employee, Rajesh Gopinathan's 6-year, 1-month stint as MD and CEO has seen the company's market value double. Return of shares increased by over 2.5 times. It's also been marked by generous dividend payouts and buybacks. TCS has seen its market cap double from $70 billion to just over $141 billion as of closing yesterday. In rupee terms, the company's market cap has more than doubled to 11.65 lakh crore rupees. Like Gopinathan, who stepped into Chandra's shoes, Krithi will need to steer the company through an uncertain global economic landscape.
The concern or the focus would be on how do we seize those opportunities in front of us and make the organization grow, and it's for our customers, for our associates as well. As I said, these are the two pillars, and whatever we do will be for those two set of stakeholders.
While the street was surprised by the management change, there is confidence in the transition plan.
They're saying the leadership change was unexpected during a challenging macro environment. CLSA says, given the age of TCS's senior leadership, Krithivasan is 58 years old, while NGS or N. Ganapathy Subramaniam, the COO of the company, is 63 years old. So CLSA believes that succession planning could become a point of focus, especially for long-term investors. Morgan Stanley says it may create a short-term overhang. However, they expect the transition to be smooth and well-managed, as seen in the stock.
Should be a smooth transition. Timing is probably not ideal given what the industry is facing as we speak, but it is what it is.
So what next for Rajesh Gopinathan? Well, he hasn't given making his resume too much thought.
I never wrote my resume after campus. And on campus, batchmates will know that we used to have a repository. One instance of leadership skills that you showed, one great learning that you had, one failure that you had. I have had no practice in doing that for the last 28 years. Haven't thought about it. Let me say that TCS has been integral to who I am. The group has been integral to who I am. I had never any second thoughts throughout my entire period.
Krithivasan has his job cut out for him as he makes a new beginning as the man in charge of the Tata Group's crown jewel. A CNBC-TV18 Bureau report. A change of guard at TCS. And staying with the Tata Group, Tata Consumer has called off its plans to acquire Bisleri. A statement sent to the exchanges says that negotiations with Bisleri for a potential acquisition have been seized. Shilpa is joining us now with more details. Shilpa, what stalled this deal?
Well, there were already reports, in fact, about 2 weeks earlier that the deal between Tata Consumer and Bisleri was seeing some concerns. There was a stall there. That's what reports had suggested, and this was over concerns over valuation. Now, remember, according to what has been reported so far, the deal was supposed to be valued at about $1 billion. And what we're given to understand is that both parties were not able to agree upon a valuation at which the deal would have gone through. And because of that, the deal had stalled. However, there was no official word from Tata Consumer or Bisleri at the time. However, today Tata Consumer has told the exchanges that it has decided to cease talks with Bisleri over a potential deal, and it has clarified that it did not sign any definitive agreements so far. Now, if you look at it, Bisleri, in fact, would have been a very good addition for the Tata Group, which has been growing its packaged water business also. Right now, it has that under Himalayan Natural Mineral Water. And Bisleri, in fact, has around 30 to 60% market share in the organized packaged water business. And this 8,000 crore or rather $1 billion deal would have been a very big value addition for Tata Consumer. And Ramesh Chauhan, who currently heads Bisleri, was looking to sell this because he did not have an apparent heir to the business. He didn't have anyone to take over the business. But now, what direction Bisleri takes from here on will have to be seen. And remember, this is not the first time that he has looked to sell the business. There have been talks with other companies in the past as well. But this time with Tata Consumer, it seemed like it was going in the right direction, but talks have stalled and now officially ceased.
All right, Shilpa, many thanks for joining us. Appreciate you giving us the update on that deal, which has now fallen through. More than a dozen PLI schemes are currently being reviewed by Nodal Ministries. The government will soon conduct a high-level review meeting on the eligibility criteria. Parikshit is standing by with details of the CNBC-TV18 exclusive. Parikshit, so a review of the PLI schemes?
Well, that's right. The government has been carrying out a review of 14 PLI schemes across different sectors. And sources say government is considering whether the investment targets mentioned in some PLI schemes are realistic. For example, the auto PLI requires vehicle OEMs to make investment of 2,000 crores over 5 years. Officials are reviewing whether the high investment targets have left many companies out of the PLI ambit. Government is also assessing whether the price caps in some PLI schemes are a hurdle to manufacturing growth. For example, incentives under mobile phone PLI are for phones costing more than rupees 15,000, and PLI for electric two-wheelers is for vehicles costing up to 1.5 lakhs. So the government is considering whether eligibility criteria should only have an incentive cap and not a price cap. Officials also assessing how certain OEMs are making future investments in the PLI targeted sectors without claiming incentives. And does this mean eligibility criteria has been restricted and has also constrained the number of players that can participate in the scheme?
Right, Parikshit, appreciate you joining us. So a review of the current PLI schemes underway. Let's shift focus to another exclusive today, and we are given to understand that Deepak Bagla, the Managing Director and CEO of Invest India, has stepped down. Sources tell Money Control that his resignation comes after the Ministry of Commerce had raised some questions about the work done by the organisation. Shweta is here with more details. Shweta.
We've learned that Mr. Deepak Bagla met with all the members of Invest India today, the entire team of Invest India, where he said that he will be stepping down as MD and CEO of Invest India, and a new MD will be taking charge in the next 2 to 3 weeks. Now, we've been speaking to a whole host of people who are in Invest India, who have worked with Invest India in the past and even in the Commerce Ministry. So from what we have learned through these conversations is that this was something that was a long time coming. There was an audit that was carried out by the Ministry of Commerce, which revealed that the kind of investments that had gone into Invest India did not match up with the output that was expected of Invest India. There was also a sense that Invest India was overstating its contribution in bringing in FDI into the country by taking credit for an increase, a surge in foreign direct investments into India. Specific questions were raised on Mr. Bagla's role in bringing those investments in, and from what we have learned, those answers were not satisfactory enough. Also, there are charges of nepotism, that a lot of people with a lot of connections were being hired in Invest India. Competence was not being given as much prominence as connections were being given a lot of importance while making these hiring decisions. There was a lot of emphasis on pushing out the work that Invest India was doing in terms of generating publicity around the work that Invest India was doing. So in terms, there were diktats and recommendations given to employees on the number of tweets they should be putting out. A roster was maintained in which would track the kind of tweets that were going out. This is what we have learned, of course, from our sources within Invest India. So clearly, there was a lot of emphasis on publicity and making Invest India look good, something that did not go down well with the Commerce Ministry.
Shweta, many thanks for joining us. We will head into a break, but up next, the Delhi High Court directs Delhi Metro Rail Corporation to pay Reliance Infra 4,800 crore rupees worth of arbitral award dues within a month. That and more when we return. The Delhi High Court today has directed Delhi Metro Rail Corporation to pay Reliance Infra 4,000 crore rupees of arbitral award dues within a month. The court has also warned that failure to pay may lead to action against the centre and the Delhi government. Ashmit joins us now with more. Ashmit, this has been going back and forth for long now. The Delhi High Court saying make the payment or there will be action. Now, what could that potentially mean?
Well, the picture's not looking good for the centre as well as for the Delhi government. They're looking at very large dues that are to be paid by DMRC. And in principle, what it appears is that the Delhi High Court is holding the central government and the Delhi government responsible for clearing those dues. We're talking big figures here. 4,800 crore rupees is the amount that is yet to be paid to Reliance Infra. Now, as far as the order itself is concerned, what are the takeaways? Well, the first direction is that both the centre as well as the Delhi government, they both hold 50% in DMRC, will have to either cough up with some kind of a subordinate debt facility or some kind of a sovereign guarantee, which will then be used for repaying this amount to Reliance Infra. So they have 2 weeks' time to decide on this request that has been made by DMRC for subordinate debt or sovereign guarantee. Now, two things can happen. Either that permission comes. Now, if that permission comes, that resolves the issue. DMRC goes ahead and makes that payment in 1 month thereafter. But if that payment is not made, if that sovereign guarantee is not provided to DMRC, in that situation, the Delhi High Court then puts the onus on centre that every penny that centre has received since 10th of March 2022 will have to be essentially over the last 12 months will have to be returned to the DMRC, and then the DMRC will use these funds for repaying the amount to Reliance Infra, 4,800 crore rupees. However, if both parts of these orders, either part of these orders are not met, in that situation, the High Court has warned of, number one, attachment of DMRC recoverable. So that is something that DMRC could be looking at. The other is further action against the centre and the Delhi government. What that action is, the Delhi High Court has not given clarity on, but has said that it will not be shy of taking action if this order is not met.
All right, appreciate you joining us, Ashmit. A quick check of some of the other headlines. Fintech platform PhonePe has raised an additional $200 million from majority stakeholder Walmart. The funding is part of PhonePe's billion-dollar fundraise to scale new businesses like insurance, stockbroking and wealth management. This round of funding is raised at pre-money valuation of $12 billion, making PhonePe India's most valuable fintech company. Biocon's executive chairperson Kiran Mazumdar-Shaw is optimistic about Biocon biologics growth prospects. Speaking exclusively to CNBC-TV18, Shaw said the recent Viatris acquisition has also contributed to the company's growth trajectory.
Our recent Viatris acquisition actually puts us in a very, very strong position to address these very large opportunities. We are a truly vertically integrated biosimilars company, which really makes us very competitive in the very small biosimilars space. And followed by a very strong pipeline of products, we believe we are in a very strong position to really get onto a very high growth trajectory in our biosimilars business.
Well, those are some of the stories that we are tracking, and pharma companies are betting big on the dermatology space with quite a few mergers and acquisitions. Now, as per industry data, the segment has seen a growth of 10% in January, followed up with a 12% growth in February, and analysts are pegging the dermatology segment to grow at around 10 to 12% annually on a sustainable basis. Ekta joins us now to tell us what's brewing in the dermatology space. Ekta.
Well, Eris Life has acquired 9 dermatology brands from Dr. Reddy's for 275 crores. This is the third acquisition in less than a year in the Indian dermatology space for the company, after the company picked up Mumbai-based Oaknet Healthcare for around 650 crores in May 2022 and 9 dermatology brands from Glenmark in January of this year, shelling out over 1,200 crores for all 3 buys. And it's not just Eris. Last year, Torrent Pharma spent around 2,000 crores picking up 100% stake in PE-backed India-focused Curatio Pharma, and JB Chemicals acquired a nappy rash cream along with 3 other pediatric brands from Dr. Reddy's for close to 100 crores. So let's learn more about the dermatology segment in India. Dermatology in India is broken up largely into 2 segments, medical and cosmetic dermatology, with the total size of the dermatology market estimated to be over 11,500 odd crores. However, the overall segment is still small, with just around 6 to 7% of share of the Indian pharma market compared to, say, anti-infectives, which is around 12 to 13%, or cardiology, which is around 13 odd percent. The dermatology segment, it seems, has picked up pace post-COVID-19. For example, in 8 quarters tracked from December 2020 to September 2022, the dermatology segment has grown in 7 out of these 8 quarters, tracked and in double digits in 5 of the 8 quarters. Now, most recently, as per industry data, the segment grew around 10% in the month of January, followed up with an 11.8% growth in the month of Feb. Companies have paid anywhere between 3.9 to over 8 times sales for these acquisitions. So why are companies paying top dollar for these brands and portfolios? Now, analysts are pegging the dermatology segment itself to grow at around 10 to 12% annually on a sustainable basis. And while medical dermatology is bulk of the market, both medical and cosmetic dermatology are expected to be growing due to factors such as more medical awareness, insurance penetration, and a need to cater to what are lifestyle-related therapies for chronic and subchronic dermatology conditions. The interest across medical and cosmetic dermatology can be seen in the portfolios picked up. For example, Eris, which now gets over 13% of sales from dermatology, will have brands such as Cosvate and Cospilite from Oaknet to help to cater to the medical dermatology segment, and moisturizing body and face wash from Dr. Reddy's as well. While Curatio Pharma, which grew around 25% in FY22 and gets 75% of sales from the top 10 brands, will provide Torrent Pharma products ranging from baby shampoo and cream to prescription creams to treat scabies. The fear is high spend, however, on sales and promotions, which could eventually impact margins of these companies going forward.
Ekta, many thanks for joining us. And that is it on this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC TV 18.